viewers to understand the kind of risk factor that might be going high in their portfolio, because these days a lot of times the kind of viewer queries that we get, Nirav, is people have multiple mid cap funds and multiple small cap funds. Also, the kind of new trend that we are looking at is having a mid cap category active fund and a passive fund. They have indexed mid caps also, since the mutual funds, the fund houses also started launching these kind of index based fund. I want you to help our viewers understand a passive strategy in a mid cap and a small cap versus an active strategy in a mid cap and small cap. Do you think an active fund in a mid cap and a small cap category could be more concentrated? We have viewers who have these both kind of fund in their portfolio, and the only reason they prefer having it is because they think because the active fund gives them a concentrated bet, and index they can get whatever they want or whatever is offered to them. So there is no chance of missing out the kind of income or profit that they are getting through this rally.
Correct. So, one thing that investors must understand that, if you're trying to play the broader rally in the segment, okay, if you believe that mid caps as an entire basket or small caps as an entire basket is going to do well, you must go through the passive route because that gives you exposure to the basket in entirety. However, there are a few things that one must consider while making this choice between active versus passive. And the number one thing that I would strongly, put forth is that more number of stocks in the underlying portfolio does not mean better diversification always. Okay, just because you have a fair number of stocks covered does not mean that your risk is going to be optimized. There is a problem of over diversification as well, and at the same time, if you are trying to play the entire basket, so it's okay. If you're not trying to play the entire basket and you're trying to optimize your returns and generate that extra alpha in the portfolio, generating such a kicker in the portfolio would be very difficult with such a widespread portfolio that a passive fund typically tries to offer. Right, so there's a very conscious choice that you need to make. Right, you're either playing the basket or you're playing select themes within the basket. Now, there are a few fundamental reasons why many actively managed small cap and mid cap propositions are also looking good, and I feel it is looking far better at this point in time when the valuations across the board are slightly rich, and there's a lot of there are a lot of questions around whether this is the right time and right levels to enter. You'll realize that the mid and the small cap segments are relatively under researched. Okay, and not everything in the mid and small cap pockets are thoroughly researched, and the prices are not efficiently priced in. So of course we are in if I were to categorize it slightly loosely, we are in a semi strong efficient market at a very overall level, but especially in the mid and small cap segment this is far more pronounced. So anomalies are not very effectively priced in. Mispricings could stay in for longer. There could be certain value traps. There could be certain red flags that may go unnoticed due to limited coverage, limited research, etc. So you don't want to just buy the entire basket. Okay, you want to rely on fund managers who have the ability to select very good stocks and very good pockets wherein there is a lot of value within it. So there are two approaches. The first approach is, instead of finding a needle in a haystack, just buy the entire haystack. But at some point you would need that needle to get your job done, right? Or else you take another path and you wait for you wait it out. You go through the entire pain and efforts where the fund manager tries and really identifies that needle for you, and then you go and participate in the upside that that needle is providing, right? So these are the two strategies that one must very consciously make a call on, and one must understand that one is not a substitute for other. It all really depends on how are you positioning it within your portfolio and what are your expectations from such an allocation.